A very good morning, everybody. Welcome to the Flow Show, Wednesday, the 17th of December, the day after the NFP data. And we have a look at where markets are settling at the moment. Dollar a little bit better off than it has been the last few days following that data and some other news, which we'll get to shortly. Good morning, Kay.
Morning, Ryan. Morning, everybody. I hope everybody survived yesterday. Was a pretty decent move after all.
Yeah, very much so, which is what we want when we're trading. And yeah, we'll look at that in a moment. Right, let's get stuck into it. First, we're going to start with a bit of data out of Japan. Machinery orders, core machinery orders, up a whopping 7% in October, following, or was expected to fall 1.8%. So a very nice beat there. Year-on-year numbers as well, booming 12.5%. Some trade balance data there as well, showing a nice hefty chunk of exports going out the door. It's up 6.1% and slightly lower imports. So that's helped the trade balance somewhat swing around. This one does like to swing around between a deficit and a surplus at times. So don't get too taken away by that, but good to see if it's a trend developing there. Government news, Takaichi sees wage gains raising household income and boosting tax revenues. She emphasises that strategic fiscal spending rather than reckless expansion is what they need to do and what she's looking to do. Says she must build constructive and stable ties with China. So they're on a little bit of a charm offensive. She did add, though, that her stance hasn't changed on China and the Taiwan situation, but maybe some moves to ease some of those tensions there. Over in the UK, we had CPI data, and depending on your viewpoint, it's good for the UK because prices have been coming down, or rather inflation, the rate of inflation has been coming down. CPI coming in at 3.2% versus 3.5 expected and prior 3.6. So a decent move south on there. The core as well, coming in at 3.2, was expected to remain unchanged. Slightly different in the PPI numbers. We're seeing input prices just rising a bit there year on year, month on month, 1.1%. Output prices still looking sticky, which is okay for margins. Those output prices outstripping input prices. RPI, that's the retail side of things, also coming in softer, 3.8%. Food, alcohol, I don't know how to describe it. Shopping basket stuff. It did a lot of the damage to CPI, coming in much lower, which will be handy for shoppers, unless it's been driven by a lack of business and people having to cut prices. This is the danger that the UK faces. Inflation coming down is great if it's coming down because people aren't buying. If it's coming because activity is weaker and people are forced to cut costs or cut prices charged, that's not such a positive for inflation, and that becomes a different kettle of fish for the Bank of England. And that's what I'm largely expecting to see a bit more of going into next year. But meanwhile, the government will no doubt be trumpeting that as they've got inflation lower, which is a whole load of cobblers, as we know. We've seen an uplift in rate expectations, now seeing some 69, 70 plus basis points of cuts by the end of next year. So creeping towards 3 cuts by the end of next year. We're pretty much now nailed on for a cut tomorrow, as can be expected. The real risk, I think, from here is whether the BOE signal a more dovish stance following all this data that we've had recently. The last meeting, Bailey wanted to see more evidence. Well, let's see if he got enough evidence. Kay, do you think this is enough to get them talking a bit more dovishly and maybe hinting that they're going to go a bit quicker next year?
Well, for Bailey, maybe enough. I don't know for the others though. But yeah, I mean it's good news, and it's somewhere good news as well for entrepreneurs and people needing to borrow, that the rates will come down a bit. But yeah, really we have to take this step by step. So we've got one Bank of England. I think indeed with this number, both the headline and the core CPI coming down um, some way, especially that the headline number was or the numbers on the month were negative, so that's pretty cool. Yeah, maybe they will be a little more dovish, or at least sending out a few warning signals that maybe talking about retail sales also, if they come in weaker, that they may be a little faster. But the main theme, which is now a global theme, let's say, is they are going to be completely data dependent, and that's probably what's going to filter through that Bank of England meeting tomorrow as well.
Yeah, I think so. But there might be a risk that it's not quite enough. One report isn't quite enough to get them talking massively dovish about next year. So there could be a little bit of risk there that he says, okay, that CPI was down, but we're not going to count our chickens and get too comfortable that inflation's on its way. So yeah, I think we could get a bit of movement in the quid tomorrow around that meeting.
Yeah,
But obviously we'll
fierce
touch on
reaction.
that. Yeah,
Fierce reaction already overnight, right? Or this morning on that number. Yeah, sterling was actually doing pretty well yesterday through everything, and on the jobs report and the PMIs, etc., etc. Sterling was doing well, and yeah, we're still not breaking above 88, but on the euro sterling, but that's maybe a euro thing. But cable got a pretty decent knock on the head there.
yeah, that's reflecting the higher volatility that we've seen this week. But yeah, we'll see how that all plays out tomorrow. Moving on to Germany, we had the IFO out, and that wasn't looking too hot either. Headline number was expected to go up 2 pips, actually went down 4 instead. Current conditions pretty much unchanged. They were expected to rise. Expectations, though, took a bit of a dump to 89.7. Were expected to come in unchanged, although there were some revisions to that. So this optimism that around this infrastructure spending, this 500 billion that they're I don't even know where it is anymore. Kay, it's got to do a lot of heavy lifting next year.
Yeah, they're slicing it down every day, though. I mean, the overall amount is still a bit up in the air, but then you got 50 here, 30 there, and we don't know where they are at anymore. But it's European, and it's likely going to take much more time than they would have liked to at the start when they came up with the big plans, etc.
Yeah, absolutely, and yeah, we'll see if that does anything for growth next year. We had the final numbers from Europe, inflation numbers, not too much to write home about, although headline CPI did come in a point lower at 2.1% from 2.2. The core remained unchanged at 2.4%. So not much there for the ECB tomorrow either, though they have their new forecasts out, which will be a big determinant on how they see things moving forward. Will there be a bit of a pushback against this general market hawkishness around central banks at the moment? And speaking of that, I've had another Aussie bank, not as hawkish as some of the others in calling for rate hikes next year, but they call for rates to stay unchanged, where they previously saw cuts coming next year. That was Westpac coming out with that lot. So we've still got that going on in Australia. Right, let's go and have a look at the old NFP stuff and whatnot yesterday. First, we had that ADP weekly number, which came in up 16.25k. The prior of if I can remember what it is, 4.75k, got revised down a little bit, but that's some positive weekly numbers coming from the ADP. NFP, that came in pretty okay. 64,000 was the headline number. So just above what was expected, but there or thereabouts, not a huge move. What was perhaps the surprise was the unemployment rate moving up to 4.6%. Now, they've got in a prior here 4.4%, which they haven't really done the October numbers. But if we take it just from the last main reported number in September, that unemployment rate was 4.3%. Now, what also went up was the participation rate, 62.5. Again, they've got this prior number. I don't know how real that is, but again, if we take it from September, that was 62.3%. So this rise in the participation rate could be behind this jump in the unemployment rate. We may need to see that squaring off a bit when the data settles down for next month. But anyway, so for November, it was all pretty much okay. Nothing was falling out of bed. As I say, a bit of question mark over that unemployment rate. Now, October, that came in minus 105,000. But within the report, the government jobs lost 162,000. Private payrolls was up 52,000. So there was a bit of a skew in those October numbers, whether it was from furloughed workers for the shutdown or whether there was some Doge cuts in there, I don't know. Either way, you can probably strip those out and just look at the private payroll numbers. So that was up 52,000. So overall, between the two of them, not huge moves, but it wasn't that negative. The market took it as negative, first of all, particularly that unemployment rate. But with that and the retail sales, which came in flat on the month in the headline sales, but if you look at the control group, the core sales, that came in, well, this number came in at 0.4. The control group came in up 0.8%, which is a pretty decent read. So between the two data points, there wasn't that much, if anything, that was bearish for the dollar. But we saw the dollar getting a little tap. But as you see now in the charts, that's pretty much flipped around quite significantly. We've got a fair bit of dollar strength going through today. Kay, how did you read all that data in the end?
Well, I must admit that for once I went with the unemployment number and the unemployment rate. Sorry. Also, that U6 gave me a little bit of a shocker, and then but luckily it only cost me like what 8 pips or so trying to sell dollars. So yeah, I was part of the market having that read on the thing, but then as you say, I mean, once all those details came out or digested, it wasn't that much of a shocker in the end, right? So yes, and probably the retail sales have helped there as well. It was kind of a pretty serious reversal after that, which, by the way, a few in our room really traded very well because they bought dollars. You bought dollar Canada as well.
Yeah, I got the slow horse.
Sorry?
I managed to pick the slow horse. I was looking
You know
at the
what?
euro dollar at 118, and
You,
I was also looking at my level in dollar CAD, and I hit that first.
Yeah, but you know what, Ryan, it's a lot of times it's the case with people who look at kind of fundamentals that, and I've noticed that for myself as well, that we for a while at least are very often on a slow horse, but the horse keeps running for longer. It's one
Yeah,
of
yeah.
those workhorses on the farm, instead of a racehorse. And it happens very much. But once the real move starts, fundamentalists will most likely still be eaten, where the day traders will take their profit. But has to be said that there was a pretty good reversal in the dollar, which is I think quite significant, I must say, and especially if you look at the euro dollar, we had where you are on there. We had that 117.80, but I also had a bit of a trend line going in there. We tapped it around that 118 and then saw that reversal, and it was a pretty hard reversal, I must say, nearly a big figure down. Well, a big figure down. It's a decent move that may hint when we dissect this move a bit, that the short-term market got sold dollars and they got it around their later hosen. I think once it went back down below 117 and a half, I guess, and then everybody out of the getting rinsed out of it, and you see the acceleration down. I do think though that it is significant enough to have seen this kind of move in the dollar. And I'm thinking about just going forward and thinking about tomorrow's CPI. If we don't see a significant slowdown in tomorrow's CPI in the US, could be that the dollar has a bit of legs for the last week and a half of the year.
Yeah, yeah, absolutely. And we said it after the FOMC. This data could be important because it does
Hmm.
put the Fed message to the test. We went into the Fed with this expectation of a hawkish cut. We didn't. We got a dovish cut. We saw the dollar sold. Now we're getting data that still is looking okay. And as you say, if inflation's sticky tomorrow, then all the doves are going to be flying the nest once again. So yeah, I'm not surprised we saw the size of the moves. Because I said it was going to be important after the Fed. But I think you're right. I think it could mark a bit of a change in the fortunes of the dollar because it was a bit undecided. I mean, initially we saw the dollar getting sold off, then it got bid up. Oh, sorry. Looking at euro got bid up, then it sold off, and then it sort of went back to dollar selling a bit, and we crept back up again, and it took a while really for dollar buying to really kick in, and we saw that sharp move down. But yeah, it could be we see a bit of a change.
Yeah, I think, well, I mean, there's two things, right? I mean, short-term market probably sold dollars on the fact of that higher unemployment, those higher unemployment rates, and the thing for the Fed members now is that whether you're a hawk or a dove, you can actually hide or justify your stance. The doves will say like, yeah, but look at the unemployment rate is pushing above our expected range that we had for 2025, and the hawks they say like, well, there's two reports where if you strip it out of the government jobs, which they are after all, people who lost their jobs or got furloughed or whatever, but they can say like, yeah, but look, we're still creating 50,000 jobs each month, and which is around or even above neutral right now. So yeah, there's a bit of both. I'm not sure we're going or we're in for a massive dollar rally,
No,
but especially the euro dollar move, and then maybe we can add a bit of cable now to that as well. Is really it looks like this may have been it for the top in euro dollar for the rest of the year, unless we get an extremely or extreme no, but a really decent drop in CPI tomorrow, because then you will have the algos plugged in and they can probably take it back to 118
yeah.
before we start to think about it again.
Yeah, exactly. Or if Madame Lagarde's talking a bit bullish and the
Oh my
forecasts
God.
are a bit bullish, that could be a bit of a double win. So, yeah, we still got another day of events and data tomorrow that could swing things around. I think
Well,
after that, things are going to die a death.
right. In theory, we
Yeah,
should.
till after the
We,
BOJ.
Yeah, well, the BOJ as well. But in theory, we should have Bank of England, I think, as a mover,
Yeah,
US CPI, and then I would rank ECB way below. Oh, yes, they may be a little more hawkish. Naval, who else? The German, Austrian.
Schnabel.
They are, sorry?
Schnabel.
Yeah, Schnabel and the Austrians, I think, as well, are still a little bit on the hawkish side. I mean, Lagarde is probably just going to wish everybody a Merry Christmas, and there's nothing in the European data where they should be overly hawkish, right? CPI is where it has to be. We know about growth, which is still anemic. I mean, what's the reason for a hawkish? Even if she comes over a little bit hawkish, there's just words, right? To me, ECB is not on the top of my watch list for tomorrow, for sure.
No, no, I don't think so either. But you never know. You never know. But we shall see. Zhao's asking, what about the Fed members' anticipation new mandates? Do you mean new Fed mandates? Then they're still not going to be looking to change that until inflation is down at target. And I very much doubt they're going to change their mandate of stable prices and jobs market. When it comes around to it, they're probably just going to do something with the inflation target, which they tried before with their AIT, average inflation targeting, which sort of went out the window 2 months after they announced it. But yeah, got a long way to go yet. Yeah.
And there's rumors flying around that they would actually go back to only a price stability target, right? But I mean, all of that is so vague, and it gets the press writing articles. I wouldn't anticipate too much on anything right now.
No, why about that when inflation is down at target and they can change it then? But anyway, speaking of rates, right after that NFP data, we saw odds rising for a January cut, rising to 31% from 22%. I haven't actually checked it this morning what we are. Let me have a quick look and see what we're expecting at the moment, and I'll get that up for you. There we go. When it pops up, there we go. So 89% we're pricing of staying unchanged in January. So we've dropped back a bit from another cut going at 11%. So that's moved back some. Right, moving on to other things. And we have the Atlanta Fed GDP now for Q3. That dipped a bit to 3.5 from 3.6%. We have Bostic out saying that interest rate cuts would place, or further interest rate cuts would place monetary policy near or into accommodative territory, which would put inflation and inflation expectations at risk. He would have preferred to leave monetary policy where it was at the last Fed meeting. His words, losing influence as he's retiring. We don't have a day in the week ending in Y unless Goolsby speaking. He said jobs market is cooling at a modest pace and still sees scope for rate cuts in 2026. Besant says that he guesses we will see a Fed chair announcement in early January, and they may have one or two more Fed interviews this week. Trump touted yesterday that he's having an interview with Waller, so he might be back in the frame. Meanwhile, Besant says that tax refunds could be $1,000 to $2,000 per household next year. One of the Fed runners, Mr. Hassett, speaking about the Fed, says if he was there, he'd have to negotiate with the rest of the committee and would have to see what kind of consensus could be reached. That doesn't sound bullish enough for Mr. Trump's wants. He was speaking out of jobs data. He said it was pretty good, and he's bullish on jobs in 2026. He said the data was coloured by government shutdown. Trade Representative Greer has said that the US is threatening to retaliate against EU companies over digital taxes. This is, we mentioned this, the big bum fight, or the next big bum fight to come between the US and Europe. Trump announced he's going to make a big announcement tonight. Apparently, according to White House's Leave It, he's going to speak about his accomplishments for a change, and he'll talk about what's to come and maybe tease some New Year policies. So I'm not staying up for that one, but you Yanks might want to do so. Trump's also ordered a blockade of all sanctioned oil tankers entering and leaving Venezuela now. So that is stepping up over there. He's talking from a drugs perspective, but there's a lot of shenanigans going on there between Russia and China as well, and all that oil movement. But anyway, he's also said he's going to ready some new Russian sanctions if Putin rejects this peace deal. Well, let's hope he doesn't, but looking at the odds of it, it might be more likely than not. And then we'll see what he wants to do with that. Could be another walk away moment. Right, that's it on the headline front. Kay, anything else?
That's it, mate.
Good,
Let's
good.
go. Yeah.
Good. We've not got a lot out this afternoon. We've got Mr. Waller speaking later on, so keep an eye on that. Now he's apparently, well, if he's out from his interview. But other than that, we've not got a lot of data to get in. We've got William speaking as well a bit later and some inventory data. Other than that, it's going to be pretty quiet, or could be pretty quiet. So we have to leave it to headlines that drop on our screens. So no data for us today. As mentioned, that CPI data is coming tomorrow. Right, so where are we? Just having a quick look at the euro while we're on it. Pretty much pillar to post, 118 down to 117. Now trying to move back up into the middle. Really a case of the old lines, looking at old lines that were support, now resistance, were resistance, now support, that sort of thing. I don't, we're saying it, I don't think there's any reason why this or any pairs sort of bust a move anywhere else, but it might be interesting when the Yanks open up just to see if they want to continue this dollar buying or whether they've done their bit for now.
Yeah, and maybe we're just in for a bit of a pause around here. This now there was nothing really apart from those unemployment rates, and nothing overly negative in the dollar, but for the dollar. But is there enough positivity in there? And I think that's what's going to be decided tomorrow, as we have already been saying, right? We could be just in a bit of a range on the dollar or euro dollar. Even the cable perhaps holding above that 132.90 figure. Yeah, I'm seeing more of a bit of a range until tomorrow. If you just take dollar on its own, and then CPI will decide upon the last week and a half moves, and then be careful, everybody, because yeah, then we will have a year-end flows together with less liquidity, because we are since Christmas and New Year are weekdays. The weeks are going to be really cut up, so the liquidity could come at a serious premium.
Yeah, because it's a bit of a funny one with year end, because there's only like 2 days, isn't it?
Mm,
We've only got 3 days. Monday is the 29th after Christmas, so it's really that little 3-day window to
yeah,
get any month in stuff done.
yeah,
Yeah, it's going to be
yeah.
right.
And that perhaps, Ryan, means that we are going to see a lot done right after the CPI and into Friday.
Yeah, I think that's a big risk as well.
Mm.
We'll definitely see it because people are, after this week, people are closing up for the holidays. We're over the central banks, we're over the big data. I don't actually know what's coming next week.
And the liquidity providers have absolutely no interest in getting whacked around. And I'm not talking liquidity providers to us, to retail traders, but liquidity providers to the real money. They have no interest in I don't know, Tudor Jones or More Capital or whatever, calling them up or hitting their systems. I think they're going to scale down on liquidity as well. So it's going to get a little bit nasty. I think the week and a half next week and half the week after.
Yeah, absolutely. Let's have a quick butchers at dollar yen. Again, not doing an awful much. It bounced nicely off of this level down here. I know Dale's been looking at this one pretty strongly. It's still holding up this whole move. We haven't yet tested the 38.2, so it's still looking fairly bullish, despite the fact we're in a sort of minor downtrend at the moment. But this looks like a bit of a treading water trend more than anything else at the moment. I'm not going to do anything with this one at the moment. I think that we have to see what happens with the BOJ and what this does after. I think this is going to be very important what happens after, and if all yen pairs are weakening significantly, or the yen's weakening significantly after the BOJ, I think we are still in big intervention risk if we start seeing all these highs getting taken out. But yeah, until then, worry about that on on Friday morning, Thursday night, Friday morning. But I'm not got an interest really in trading this at the moment, Kay.
Um, hmm. I'm actually I bought a little euro yen because I didn't want to have dollar yen into the US CPI. But I think even where the numbers, the data now are really supportive for the next hike. The next hike, the Bank of Japan hike is baked in, and there's still this thing going on about Takaichi. Yeah, she says they're not going to blindly spend money, but then at the same time she comes out saying that there's no time for austerity now. We need to get our economy on the road again. So. I still think that overall the overall picture is still bearish yen, but yeah, it's maybe a little dangerous to be in dollar yen right now. But I do agree
Yeah,
that 154.5 is shaping up as a pretty decent support now in the dollar yen. No? And
yeah,
if even if tomorrow's CPI comes in, let's say 1 or 2 tenths lower, and we get a test of that level, I might give it a try even before, or I might flip it into dollar yen if we get closer down there, my euro yen into dollar yen, just ahead of the Bank of Japan. I think the Bank of Japan is so baked in. Um, Expectations, if you look at the 2 year, we're hovering just above 1% on the 2 years in the yen. 1% is about where the market expects them to end up. So we may or we may not get a hint at that on Friday. My best guess, but we can talk about that tomorrow. My best guess is that Ueda is just going to leave the door open and the job not finished. So that may have a little bit of a positive effect on the yen, but the market is probably going to wake up and just continue what it has been doing for a while now. That is, sell a few yen once the yen gets a bit of strength.
yeah. No, I agree with that as well. So yeah, we've got our plans ready. We think we know what's going to happen. We just have to have it confirmed.
Mm,
Right, a couple more. Dollar CAD, that had a fairly decent bounce of that support area. I've been keeping my beady on. I was looking at both the NFP and the other stuff, just to, if we can't break that over all that data, giving it a little go. So I'm a little bit long on that one and doing a bit of slicing and dicing. But, compared to cable, compared to euro dollar, this is a pretty small bounce. Can't get through this little old level here that was a bit of support, term resistance in this 80s area. So I don't think we're out the woods as far as the downside's concerned, but we've got something to work with now where we didn't have an awful lot to work with all the way down here. So we'll see if that one continues. And yeah, this euro sterling, if it's had a bit of a fun week. Old euro sterling, up and down. Not often you see this one moving so fast. It can make you
no.
dizzy. But this 88 level still proving a tough nut.
Mm,
It's going to go all the way up to the figure. It's getting a bit messy down here now at the moment. But yeah, if the Bank of England are a bit more dovish, I can see this moving well into 88s.
mm.
Whether it's got enough to get to these highs, I'm not sure, but I would imagine we'll at least get up to this 88, 25, 30s, 2030s area and have a look up there. But if we close up here somewhere towards the end of the week, I might decide to keep my position on because I'll be doing some slicing and dicing off of these longs. I was thinking about taking it all off for the Christmas 2 weeks, but if I've got a bit in the bank just to cover that, then I might stay in it. What are your thoughts on this one, mate?
Yeah, agree. I'm still smaller, long right now, but I'm keeping it. And let's get over the Bank of England hump, and then we will make a decision on it. I wouldn't be surprised actually if the thing goes through 88. I haven't seen too much of indication that sterling should be bought, but I think tomorrow is really the test, right, on the
Yeah,
Bank of England, and cable will be a lot whippier, I guess. But yeah, this euro sterling, if we get above 88 and hold it, I think it's gonna go and close pretty high on the year as well. It's so I'm keeping mine right now, and just it's a reduced position. I was adding below, but then yesterday I didn't really want to press the button anymore when it came
Yeah.
back down to 87.5 because it was looking very, very off that at that time, I must say. But then again, evening move, US, are they really trading crosses? Not really, right? So that may have had to do with it.
Yeah, absolutely. I'm being a very much more picky with my levels on this one. I've got me points I want to trade, and I did think the same thing. Should I pick up a little bit here? But no, I've still got some down from that 87.20, so I'll just play around with that for a bit and see what's what. Right, I'm going to punch it over to you. So
Mike asked about the Aussie, so let's have a look at that Aussie then. Undecided, I'm going to say, but I wouldn't be surprised that we're just going to drift a bit towards that level. So just saying that I wouldn't be surprised. I don't have anything running on the Aussie. I'm actually eyeing Aussie Kiwi. If it goes low enough on like somewhere closer to 114, I'm probably going to try long again. But Aussie dollar as such, Aussie and Kiwi, that was that quick spike on the data yesterday, yeah. But it's hard to hold the levels right now. So let's just say I wouldn't be surprised before the week is over, or maybe the day over, and as an anticipation or not wanting to have any or too many dollars in position. Sorry, 65.95 figure, and then we have this level here, right under there, 65.80. That's going to be your confirmation level. So we could potentially do something like that, like have a false break of this trend line and support level and then bounce. But if we get below 65.80 and hold there, that would be bad news going into year end, I think. Okay, so there's your levels. Top side 45.50 to start with, and then we have built quite a few smaller levels there. I don't, as I said, I don't have a position in there because I'm if I would have a view that yeah, the dollar has to go down, this would be a candidate for me to be long. I'm still more positive towards the Aussie compared to Kiwi, for instance, but my view on the dollar is too muddled. And actually, I'm starting to feel like the dollar may actually pick up some speed if we don't get a weaker CPI tomorrow. So yeah, the risk is here, in my opinion, Mike. Okay, yeah, 65.90, and then yeah, but RBA is hawkish. But on the other hand, I mean, people are expecting, and I'm just going to repeat what I said yesterday on Face. I think people expecting the RBA now to hike twice in 2026. Yeah, Bullock is Bullock is a hawk, but I mean, are we in dreamland or so? I mean, unless we get like extremely good growth and a very good jobs picture. Where is that? Where are those two hikes going to come from? Okay, let's not forget that Australia, they kept their rate still at 3.6. I think it is percent. They are now amongst the high yielders in majors. Yeah. So I mean, I'm not on board with the two hikes for 2026 on the RBA. Not yet. Okay. Unless some things really change or inflation flies back up to 4.5, 5% or so. But I think they would hate to have to hike rates because of higher inflation. That's my view on it right now, regarding those RBA things. Um, Gold, silver, um, gold is just waiting in the wings here, but silver is continuing to rally. So a lot of people are expecting a catch-up move on gold. I still think that we are going, and I just maintain what I've been saying virtually the whole year, right? Since Trump came on, I still think that the metals in general will close well, but there's something different going on in silver, right? Silver is there's a big problem in the supply. I also think the momentum funds are having a really, really strong grip on this, but it's used for everything from technology development, AI, solar panels, and let's not forget, while so many drones are flying across whatever borders you can imagine now, and silver is used in all of that. So there is supply, just can't follow the demand. And this thing, why not hit $70 before the year is over, you know? But let's just keep it to the prices. The line now, the boom bust line now, for at least the shorter term, is going to be 60. It goes back below $60, then yes, we can have a bigger correction. But this one is that bullet train. I'm not going to stand in front right now. It's rather a case of if you want to be long of it somewhere. Oops, sorry. If you want to be long of it somewhere, just be fast in picking those corrections, right? Because we see after every correction here that we do a next leg higher. So that for silver. Oils, well, supports, big supports here in the oils. We've seen this level here, $55 on on the WTI. It's also been a traffic zone before, so 55 is the level that everybody looks at. Now we have seen all the various rallies that we have seen over the past years actually have all been sold. Now we are, if you look at it from the longer term perspective, we're hanging towards the low, but respect the level, respect that level also, which was going on in Venezuela, etc., etc. Respect that level, okay? And that's all I can say about what's going on in oil right now, and people looking maybe at this prior low here around 57.20. If that goes, we could have maybe a little bit of a short squeeze coming, but the overall picture is still looking mega bearish in that. And yeah, the last one, and then I'm gonna give it back over to Ryan. Cable. Yesterday I said 134.5. Look where we stopped. Yeah, we did the algo pips just above, just to make some people doubt maybe about the level, but that's exactly where we stopped. And then we had the big hit after the CPI this morning. Watch what's happening if ever we get down to, as I said earlier, 132.85 figure. This is really where cable needs to hold if it has to at least stabilize. Again, going into the Bank of England tomorrow, we will have a look because we will have the flow show before the Bank of England. But for now, I'd rather see it trade a little sideways, but if sterling crosses come under more pressure, perhaps just go and have a test of what's happening in the 132.85.95. I think every bounce now back into that 133.65.90 is going to find sellers on because the move was pretty decent and also in line with what's happening on the rest of the dollar pairs. Any bounce here is probably going to be met with selling interest. And with that, back over to Ryan.
Thank you very much, mate. Wonderful stuff as always. And that's where we will leave you for today, boys and girls. So do have a great day ahead. Stay safe, trade well, and we'll see you all tomorrow for the big central bank